Friends, for some of you who are active investors and traders and who trade very frequently, it may not be a surprise that you may be losing out on lakhs of rupees just on account of the amount you pay out as your brokerage. So if you are trading with Axis Direct or probably HDFC Securities Kotak, you may be paying out about 0.5% of your entire transaction value as your brokerage. This extrapolated to 200 or 300 investment transactions or trades a year could sum up to more than a lakh rupees. Now to tide over this, you could open a completely free demat and trading account using UpStocks, which is incidentally backed by Ratan Tata, and enjoy the benefits of completely free delivery based transactions in equities and a nominal fee of around 20 rupees or 0.1% on intraday or FNO transactions. Now this, as you can figure out, is dirt cheap when compared to any one of the other brokerages. This is not all. Along with this, anybody who opens an account through the link provided in the first comment or the link provided in the description is also entitled to join our Telegram and WhatsApp group, where, as most of you know, just in the last 2 weeks or 3 weeks, we have made close to 40% on our trading capital. So this could be a wonderful opportunity to join our group for free. Also, you are entitled to a completely free stock as a gift when you open a trading account with UpStocks, and you could also be entitled to 2,000 Flipkart vouchers which would be given out to the first 2,000 people. So friends, hurry. This will not always last, as it's too good to be true.
Now, having seen how you could go ahead and save a ton of brokerages, let's get back to the main topic for this video. In this video, we'll be talking about 3 small cap and 2 mid cap all-weather stocks which have weathered various market cycles and have outperformed over the years. Please watch this video to know more about these stocks. Now the first stock on the list is Deepak Nitrite Limited, which is available at Rs 290.10 and the face value for it is 2. The target here has been set at Rs 374. The symbol for it is DEEPAKNTR. Now Deepak Nitrite Limited is a chemical manufacturing company which also offers color intermediates. The company's products cater to several industries such as colorants, petrochemicals, agrochemicals, rubber, pharmaceuticals, paper, textile and detergents. Now the primary business of this company is involved with the manufacture of organic, inorganic and fine chemicals. It reported strong results for the last quarter of 2018-19 and its subsidiary Deepak Phenolics reached 100% utilization at its phenol and cumene plants. According to a research report by Edelweiss, the company is well positioned to capitalize on the increasing demand for phenol in India and expects a growth revival in the fine specialty chemicals segment. The company's performance will improve in the product segment and its basic chemicals segment is also expected to continue its growth momentum. Now, as is evident from the 1-year chart, this company has not really created any major wealth. However, of late there has been a spike. The market cap of the company is 3,956.76 crores, which means that this company is a small cap one. The EPS of 10.12 translates into a price to earnings ratio of 28.67, which is much more expensive when compared with the industry PE of 14.31. The price to book ratio of 3.69 is also slightly on the higher side. The company's debt to equity is also a bit high at 1.3564, whereas the return on equity for this company is 0.1618. Promoter holding is 44.85% and is a bit below average, and none of the promoters' holding is pledged. Now the second stock on the list is Kei Industries Limited, which is available at Rs 480.10 and the face value for it is 2. The symbol for it is KEI. Now Kei Industries Limited is engaged in the manufacture and supply of power and other industrial cables. Its products are used in power, oil refineries, railways, automobiles, cement, steel, fertilizers, textiles and real estate sectors. Now, as is evident from the 1-year chart, this company had been consolidating for the majority of the year. However, of late it has had a huge spike. The target price here has been set at Rs 542. Now this wires and cables manufacturer has a global presence and offers a wide range of wiring solutions. It reported strong numbers in the last quarter of 2018-19 and its sales, profit and margin growth has been supported by all business segments. SBI Capital is bullish on the stock due to its high proportion of retail sales, strong order book and diversified presence. Strong earnings growth, improving cash flows, and return on equity of 24 to 25% makes the stock eligible for a re-rating. Now, looking at the financials, the company is a small cap with a market capitalization of 3,789.21 crores. The EPS of 23.04 translates into a price to earnings ratio of 20.84, which is slightly more expensive when compared with the industry price to earnings ratio of 16.90. The price to book ratio of 4.87 is also slightly on the higher side. The company has a dividend yield of 0.25%, whereas the promoter holding is just below average at 45.93%. And the good thing is that none of the promoters' holding is pledged. Now, one concerning factor for this company is the very high debt to equity, which stands at 1.554. Now, the third stock on the list is Kei Industries Limited, which is available at Rs 318.25 and the face value for it is 2. The symbol for it is MINDAIND. The target price here has been set at Rs 391. Now, Kei Industries Limited is a supplier of automotive solutions to original equipment manufacturers. The company offers a range of products across various verticals of auto components such as switching systems, acoustic systems, and alloy wheels, among others. Its business divisions include Lighting Systems Division, Switch and Handlebar Systems Division, Acoustic Systems Division, and Sensors, Actuators, and Controllers Division. Now, this company provides products for passenger vehicles, commercial vehicles, motorcycles, and scooters. According to a research report by KR Choksi, the company is likely to maintain its strong growth due to the implementation of the BS6 norms, enhanced safety features, and premiumization of vehicles. Moreover, inorganic growth and consolidation of the group businesses will bring cost efficiency and better operational management. Now, as is evident from the one-year chart, this company has not really outperformed and has been a laggard throughout the entire year. The company is a mid-cap with a market capitalization of 8,345.05 crores. The EPS of 10.89 translates into a price to earnings ratio of 29.22, which is much cheaper when compared with the industry PE of 46.68. The price to book ratio of 4.23, however, is a bit on the higher side. The company's debt to equity is 0.6963, whereas the return on equity for this company is 0.1845. One very strong factor about this company is the excellent promoter holding, which stands at 70.79%. Also, none of the promoters' holding is pledged. Now, the fourth stock on the list is Sonot Software Limited, which is available at Rs 349.40 and the face value for it is 1. The symbol for it is SONATSOFTW. Now, the target price here has been set at Rs 413. Now, Sonot Software Limited is an IT services and solutions company. Now, this company provides IT solutions to retail, manufacturing and distribution, travel, and software industries. Reliance Securities is bullish on the stock due to its differentiated business model, focus on intellectual property and platforms, higher dividend yield, quality balance sheet, high return on equity, and no equity dilution in the past several years. Decent cash generation and reasonable valuations along with healthy growth will lead to stock price growth. Now, looking at the one-year chart, this company has not really done anything and has generally been flat throughout the entire year. The company is a small cap with a market capitalization of 3,674.27 crores. The EPS of 23.70 translates into a price to earnings ratio of 14.74, which is dirt cheap when compared with the industry PE of 23.55. The price to book ratio of 4.78, however, is on the high side. The company has a very strong dividend yield of 3.65%, whereas the promoter holding is a disappointing figure and stands at 28.17%. The good thing is that none of the promoters' holding is pledged. The 52-week high is 428.60, whereas the 52-week low is 265. Now, the final stock on the list is Artie Industries Limited, which is available at Rs 1778.05 and the face value for it is 5. The symbol for it is AARTIIND. Now, Artie Industries Limited is a manufacturer of specialty chemicals and pharmaceuticals. The company is also engaged in the manufacture of home and personal care products. The company operates through 3 segments, which are specialty chemicals, pharmaceuticals, and home and personal care chemicals. Now, as is evident from the one-year chart, this company has been on a beautiful uptrend and a lot of wealth has been created here. The market cap of the company is 15,410.12 crores, which means that this company is a mid-cap one. Now, this being a specialty chemicals company produces chemicals used in the manufacturing of pharmaceuticals, agrochemicals, polymers, additives, surfactants, pigments, and dyes. According to SBI Capital, focus on value-added products, capacity augmentation, superior margin profile, and long-term contracts will support the company's robust revenue growth. The management expects negligible material impact on the company's performance due to the termination of India's GSP benefit by the US. Now the company has a EPS of 54.15, which translates into a price to earnings ratio of 32.84, which is much more expensive when compared with the industry price to earnings ratio of 17.41. The price to book ratio of 5.40 is also on the higher side. The company's dividend yield is 0.62%, whereas the promoter holding is just about average at 49.36%. None of the promoters' holding is placed. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This is not something we have researched on our own. We'll be providing the link to the source for this video in the description section. Please go through it to build more conviction around your investment decision. Thanks for watching, and please subscribe to the channel if you haven't already done so. Have a great day ahead.